For centuries, the world ran on land, loyalty, and bloodlines. Kings ruled. Lords commanded armies. Serfs worked the fields. Wealth was tied to power, not innovation, trade, or ideas. But then something revolutionary happened. Money began to break the old order. This is the story of capitalism versus feudalism. Imagine medieval Europe. Vast manors, walled castles, and peasants kneeling in the fields. Society was rigid. Your birth determined your life. Land was the ultimate currency. The more land you owned, the more power you had. Kings could summon armies, nobles could collect taxes, and serfs had little say in their destiny. This was feudalism, a system built on hierarchy, tradition, and control. Wealth was static. Trade existed, but it was limited. Guilds regulated production, and markets were small and local. Risk-taking was dangerous. Innovation threatened stability. Money existed, but it was controlled by the elite. Coins were scarce, often debased by rulers, and difficult to move across borders. Credit systems were primitive. Ordinary people had little access to capital. Power was inherited, not earned. Then came capitalism, a system based on money, trade, and opportunity. Unlike feudalism, capitalism rewarded risk, innovation, and efficiency. Merchants, bankers, and entrepreneurs began to rise. Wealth was no longer tied strictly to land. It could be created, invested, and multiplied. And this shift shattered the old world. The roots of capitalism did not appear overnight. It grew slowly, often at the edges of feudal society. Coastal cities and trading hubs became incubators. Venice, Florence, and Bruges saw money taking precedence over land. Merchants could buy influence with cash rather than inherit it. Banks emerged, issuing loans and financing trade. Bills of exchange allowed wealth to move across continents. Credit multiplied the impact of capital. Ordinary people, once constrained by birth, could participate in markets. This new financial power created tension with the feudal order. Money versus land. Feudal lords relied on land to maintain power. Land produced food, resources, and soldiers. But land could not be moved. Trade required mobility, innovation, and liquidity, things money excelled at. Merchants, backed by financial institutions, could fund expeditions, build fleets, and create markets. They were no longer beholden to the local lord. Wealth became portable, scalable, and independent of noble birth. The first great clash between money and land occurred in the Italian city-states. Banking families like the Medici financed rulers across Europe, often controlling political decisions without owning armies. Florence's influence grew through credit and investment rather than conquest. Capital could now challenge hereditary power. The printing press and financial revolution. The invention of the printing press accelerated this transformation. Suddenly, ideas and financial instruments could spread faster. Ledgers, contracts, and bookkeeping manuals became widely available. Literacy and numeracy increased. People learned to manage, borrow, and multiply money. Feudalism struggled to adapt. Old systems depended on secrecy and loyalty. Capitalism thrived on transparency and competition. Money empowered individuals and institutions over inherited authority. Wealth was no longer just collected, it was leveraged. Colonialism. Capitalism expands. As capitalism grew, it found new opportunities beyond feudal borders. European powers began exploring the world. Trade routes to Asia, Africa, and the Americas became the new battlegrounds. Colonial enterprises were financed by joint stock companies, early forms of corporate capitalism. Investors pooled money to fund expeditions and plantations. Risk was shared. Profits were distributed. Success no longer depended on land or lineage. It depended on strategy, planning, and commerce. Feudal lords could not compete. Merchant capital and overseas trade created wealth far greater than local estates. Economic power was shifting from castles to ports, from fields to markets. The Industrial Revolution. Feudalism collapses by the 18th century. The clash was inevitable. The Industrial Revolution turned capital into a dominant force. Factories, mechanized production, and wage labor replaced serfs and handcrafts. Capitalists could generate wealth faster and on a larger scale than feudal estates ever could. Money dictated power. Investors, bankers, and industrialists began influencing politics, policy, and social structures. Landed nobility became symbolic rather than functional. Wealth was no longer inherited. It could be earned, invested, and multiplied. Feudalism had lost its foundation. The political shift, the rise of money, also changed governance. Feudal systems relied on personal loyalty. Monarchs and lords wielded power directly. Capitalism introduced representation, trade laws, and financial regulation. Parliaments, charters, and stock exchanges began shaping policy. Governments increasingly depended on taxation, debt, and public finance rather than feudal levies. Rulers borrowed from bankers instead of demanding service from serfs. This created a feedback loop. Economic power reinforced political power. Money, not land, became the ultimate lever of influence. Global impact. The clash between capitalism and feudalism did not end in Europe. Its influence spread globally. Colonial empires used financial instruments to manage territories. Trade finance, banks, and investment networks enabled control over distant lands without direct military occupation. Wealth flowed from colonies to metropolitan centers, empowering merchants over nobles. By the 19th century, financial empires like Britain and the Netherlands dominated the world. Capitalism had won, but feudal remnants persisted in aristocracy and tradition. Still, the lesson was clear. Money breaks old power structures. Lessons from history. Wealth is power, but liquidity multiplies it. Feudal lords had land. Capitalists had cash and credit, which could travel and grow. Trust and innovation matter. Banking systems, joint stock companies, and trade networks gave capitalism the tools to surpass feudalism. Old hierarchies resist change. Feudal lords tried to limit trade and maintain privilege, but money's flexibility overwhelmed them. Power adapts. Modern governments, banks, and corporations owe their structure to the transition from land-based to money-based systems. Modern implications. Today, the battle continues in a different form. We see it in debates over wealth concentration, financial regulation, and technological disruption. Traditional industries, once akin to feudal estates, struggle against venture capital, digital platforms, and fintech empires. Money remains the ultimate disruptor. The history of capitalism versus feudalism is a reminder. Economic innovation changes power faster than politics alone. Control over money often precedes control over society. Conclusion. Feudalism taught the world about loyalty, hierarchy, and territorial power. Capitalism taught the world about mobility, risk, and opportunity. Together, they show us a fundamental truth. Money is more powerful than bloodlines. Credit is more flexible than land. Trade is more enduring than armies. By studying the transition from feudalism to capitalism, we see why financial empires rise, why old power structures fall, and why wealth, when combined with innovation, shapes history more than kings ever could. If you enjoyed this journey through history, like, subscribe, and join us as we uncover the hidden forces that shape money, power, and the modern world.